Welcome everyone to another episode of Price Targets with your host Bitcoin Jack. Welcome back. It's Wednesday. Market has been super boring and slow. There is a few plays on olds, but I haven't had much trades over the last week. Probably less than 2 if I count correctly. We're going to be talking about pretty much where things may be heading from here. Hopefully it's going to make some sense. It's probably going to be a very short video because not much has happened, but we're going to be talking about a few triggers. But first of all, your attention for Prime XBT. They're sponsoring this content and making it possible for me to make these videos. So thank you, Prime, for sponsoring. And if you sign up using the ref link in the description and the watermark, then and use the promo code Bitcoin Jack, you could get up to 50%, up to 0.5 BTC bonus on your first deposit. So some conditions apply. Make sure you check that out. But thank you, Prime, for sponsoring. And let's dive into. Let's start with Bitcoin. Pretty much still within a consolidation here. The resistance is the previous breakout block that we had on the on Feb 8th, which gave us I think that was Elon news. So basically the little consolidation before that is now a resistance. If we claim that, I think there's room to rally. And then to the downside we have the weekly demand as at the breakout block right here, and price is basically stuck between the two levels. So not much can be said about it. We can identify a couple of things. Let me first shift this to a slightly lighter color so it's less intrusive. That there was one trade last week. I think I shared that on Twitter, which was basically losing this level into this level, into the mid-range. Other than that, not much has happened. We're just squeezing tighter and tighter. So we can identify, and it doesn't have to be a symmetrical triangle, but it's really starting to look like one. But these patterns can often morph into different patterns. So maybe this is the high already, but it's unlikely as price is making a small rally here. So we're probably in this triangle, and we're about to print and test the upper trend line. So essentially, I don't like trading symmetrical triangles because they tend to morph into other patterns. And then the other thing is usually you trade these very close to the mid-range. So basically 43K is the resistance, and then the support is probably at around 33 at the bottom portion of this weekly demand box. So essentially, if you if you long this, it may just come back here, you're fucked. It may even just trade down here. If it comes down here and you trade this, usually it's going to come up and take out the stop. So trading triangles like that is just not something I really like to do, and they're pretty unpredictable. Essentially what could happen is that this just trades up here, then just trades up here, and then it's still just some silly range, right? So in my opinion, no edge. Usually the first move is a fake out, but knowing that, sometimes it just goes the other way around. Bottom line is there is absolutely zero edge trading these. So, the wedge here, that's always a beautiful pattern to trade, simply because, it trades towards the bottom of your range. Usually when you have like 3 touches and you have a fake out like we had here, that's beautiful, right? And then your invalidation is pretty close by, which makes it pretty nice to trade. But this triangle just sucks. Other than that, I don't think a lot of things have changed. If you've watched the previous videos, I do think that the triangle could break down, sweep belows here, come even down as far as, you know, is 25. I think there's a lot of demand sitting here. It's going to be really hard for price to actually get down here, but never say never. And it's just not an environment I like to trade right now, unless you're trading the shorter time frames. You're really stuck with that momentum, and chances that whatever momentum occurs from here is going to be some kind of fake out. So generally, I think if this comes down, it's going to get up really quickly at some point too, and if it goes up, there's a lot of resistance, so it's probably going to come down again. So I'd rather, you know, if this comes up here, I'd rather, you know, get short exposure and try some plays to the downside, and then maybe get long as it retests this range and the demand here, and then if it loses it, get out of there. And then the other way around as well, trading this as a short right now, right here, it just doesn't make a lot of sense to me, unless you're willing to, you know, be behind your computer 24/7. But I think the slow market is actually giving the opportunity to do something different with your time. ETH has been the asset that's been moving a little bit, and unfortunately, after taking out my exposure, things didn't really trade into my bid, so no exposure here. But for now, I think it's just going to consolidate and then eventually break out and go further up. So I'm going to be waiting for price to come back to the range low here, and hopefully get an opportunity. If not, I think it's just, you know, going to ding dong around a little bit longer, and then we're probably going to get the setup I talked about last week, which is basically ding dong around a little bit, form like a rounded bottom here, and then start breaking through the supply and go for higher prices. There's not a lot to be said here. You know, there's zero volume. There is a low time frame rally right now. It's into resistances, diagonal, horizontal. I don't think this is an environment I personally like to trade. So I think I'm just going to be waiting for a little bit and see what's going to happen next week. Hopefully we can have some cleaner action by then. The other thing that potentially is interesting to look at, let me delete this, is the monthly. For the last couple of months prior, every month opened pretty green. This behavior has broken. So essentially, we're pretty neutral here as well, with a giant gap all the way to 20. So essentially, if you're able to bid 20, and that happens, that's just that should be a really good trade. And you know, 45 to 50 is pretty strong resistance. So I'm waiting for either to happen and then start trading again. That makes sense. I think that's it. You know, that's Doge obviously listing on Coinbase, so that's causing a little bit of a rally. I'm gonna have to see what's going to happen, but it's probably going to be a dump on the listing itself. And then I think that's kind of it. I think this is just a market environment where we got to be patient. Bitcoin dominance here, kind of doing what we're expecting. So essentially, this level here at like 41, 42 is where I think for now rejection is going to happen for alts, and then alts going to have a little bit of a pullback. I think that might be a really good spot to get some alt exposure. So basically, alts hedge, sell once they get around this level, and then buy them again as it bounces into the 48, 46, 40, 50 region. I hope that makes sense. It's short. There's not much to tell. I'm pretty sorry. I wish I could tell you something different, but just gotta convey it as I see it. And I hope this time is giving you some opportunity to catch up with other things that got neglected over time during the entire bull run. I hope either of the scenarios I talked about is going to happen. So either we rally to 45.50, that's where I'm comfortable to start looking for signs of weakness and maybe short it back to current prices. And then the other way around, if the triangle that we're looking at basically decides to break down, then I think it's worth to start looking for longs and signs of weakness to the downside. So no rush. Right now, there's no edge here. And basically, we're range bound between these levels. So patience, and we'll see what happens next week. All right. Thanks again to Prime for sponsoring, and I hope to catch you on Sunday. Cheers.